On January 2nd, Apple lowered their revenue forecast going forward, and the stock dropped about 9% today, and it seems everybody's really surprised at this. However, if you look at the chart, you'll see in October, Apple reached a 52-week high of $233.47 or something like that. And now it's, the low today is about 142. Okay, that's about a 39% drop since October. So you would think that with this huge drop, some analysts along the way might have changed their recommendations on Apple before this, this bombshell they dropped last night. However, let's take a look. And this is from an article on Zero Hedge, a financial website that posted a snapshot of all the buy recommendations on Apple stock as of last night. So as of last night, there was 26 buy recommendations, 20 hold recommendations, and only 2 sell recommendations. And if you look at this list here, you'll see all the big firms, JP Morgan, Morgan Stanley, all these guys, and they have price targets anywhere from $300, $280, $240, $228, all the way down to $185. Okay, these guys have these buy recommendations all the way on the way up, but when the stock is going down, they still keep their buy recommendations. Why is that? I mean, if they're the analyst, aren't they analyzing, when the stock should go down or when the business has changed, so that, or at least, change to a hold or, underweight or something like that? No, they all have buy recommendations only until something like this happens, and now, they all change their tune. So let's see what's changed since last night to today. Okay, well, look at this list. Bard cuts price target to 185 from 230. Another one, price target from 300 down to 200. Another one from 225 to 160. And the list goes on, where were they when the stock was 233? Why are they coming out now when the stock is 142 and downgrading these stocks and downgrading their price targets? It's like the proverbial closing the gate after all the horses have escaped kind of thing. So should you be surprised that none of these analysts changed their ratings or warned people to sell their stock when it was back in the 200s and now are only doing it down at 140? No. And the reason is that analysts are not there to really help you time the market or get in or get out. They're really there as cheerleaders for Wall Street, okay? And for 2 reasons. One is they do business with all the big mutual funds that hold stocks like Apple or whatever, the hedge funds. So those funds that hold these stocks, they don't want somebody coming out and saying, oh yeah, this stock sucks, you should sell it. Here's a downgrade to a sell and a price target to 100 or something like that. They're going to get pissed off because their stocks are going to go down. And nobody wants stocks to go down. They always want to say everything is rosy, stay the course, don't sell, don't be a market timer, all this stuff. And whatever you do, stay in the stocks. So that's why they always have a buy rating. The other reason is that these investment banks, they want to do business with these companies. So they are potential clients if they have underwriting that they want to do, bond offerings, secondary offerings, any kind of things, acquisitions or whatever. So who are you going to, if you're Apple, are you going to go do business with the guy that has an analyst that put a sell rating on your stock? No. And that's why they keep the buy ratings up. Another thing is that there's no glory in being the only person with a sell rating on a stock, because if the stock doesn't go down and it goes up, you're going to piss off a lot of people. You're going to piss off the company you put a sell on. And you're going to piss off your own company because now they're going to have pissed off clients that say, oh, you put a sell rating on this stock and now it's up 15%. I could have made money. You guys suck. Everybody else had a buy rating. So there's safety in numbers in being part of the herd. The truth is that if the analysts really did know when to put a sell rating, like if they put a sell rating at 230 and now they put a buy rating here at 140, if they really could pick stocks like that, they wouldn't be analysts, they would be hedge fund managers. And we see that there is one hedge fund manager, I'm sure among others. Bill Fleckstein came out and said, yeah, I saw this coming for 3 months. He's been short for 3 months already on Apple stock. So it's not like nobody saw it. But since misery loves company, this is not going to change, because if you're an analyst and somebody calls you and says, why did you have a buy rating on Apple stock all the way from the 200s down to 140? You know what they're going to say? Hey, everybody else had a buy rating too, so they're all just as bad as me, so I'm not so bad, And they'll say, hey, look, even Warren Buffett had $40 billion of Apple stock, so he lost $3 billion, and I'm not Warren Buffett, so you can't blame me, I'm in good company. Even Warren Buffett lost money. You should look at analysts as just the cheerleaders that they are, and don't put any weight to their ratings. Especially don't use it to stay in a stock or buy a stock or sell a stock. Make your own decisions. They really are just cheerleaders. They're kind of like the late night talk show host that has a movie star on that's promoting their new movie that's coming out. Jay Leno got a private screening of the movie, before the show, and whether he likes it or hates it, he's going to tell you it's a good movie, go out and see it. He'll never come out and say, oh yeah, by the way, I watched that movie before the show and it was the worst movie I ever seen, and so I'm going to do everybody in America a favor and save them, $10 by telling them not to go see the movie. He's not going to do that, because he'll be out of business and no stars will come on his show anymore. The Hollywood studios will complain and everything like that. So it's always just everything's great and smiley and happy, and keep buying and stay in it. So now that you know why analysts keep their buy ratings on a stock even as it's going down, and only put a sell rating when things are just totally dire. I mean, I've seen analysts go from strong buys to sells after 60, 70, 80% drops in a stock price. I mean, so what, at that point, what's the point? So that's my video on why you shouldn't listen to analysts and why they got the Apple news wrong today. So thanks for watching, and check out my future videos and give me a thumbs up if you like this video.